Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, August 28th, 5:36 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. Couple of yellow arrows introduced to the trend gauge today. Uh, Last 3 days, we've seen underperformance by tech growth leaders and rotation into value. So, as a caution, we're putting, haven't really seen a significant number breaking the 21-day moving average, but we're putting the yellow sub arrow on there as we do like to incrementally track what's going on. And 21-day moving average, NASDAQ 100 bounced there, but the 21-day moving average is still below the 50-day moving average. That's not the moving average stack that we want to see. And that again represents the weakness that we've been seeing in the NASDAQ 100 names. So yellow sub arrow there. And also with a break of the 50-day moving average today on the NASDAQ 100, we've got the yellow arrow there as well. Long term, all five of the indexes are trending above their 200-day moving average. Market never gets into serious trouble as long as that fact stays in place. And for the five indexes trending above their properly stacked short-term 21-day moving average and medium-term 50-day moving average. When I say properly stacked, you want to see the lower duration moving averages above uh, incrementally higher duration moving averages. So you want ideally the 8 above the 21, above the 50, above the 100, above the 150, above the 200, and so forth. So what happened today? As I said, day three of tech and growth leader weakness, and value stocks again, money flowing into there, showing relative strength. Financials looking extremely strong, and they're holding up the S&P a bit. As you know, we're fond of saying all sector rotation takes place within the S&P 500. That's why we keep that as a core holding in our portfolios. And when the market is in the right situation, we accentuate that with leading stocks and leading sectors. So here are the numbers on the day. Our 21-21 list hit hard again. 19 out of the 21 lower, down an average of 1.36%. The Big Eight down 1.23%. RG8 down 1.2%. This is our eight growth ETF composite. S&P 500 down 0.6, equal weight only down 0.28. NASDAQ 100 down 1.13, down a bit more after hours as NVDA is down about 6% on earnings after being down 2% during the session. So not a blow up, but not a strong reaction, certainly. And this is carrying over to the tech sector. Equal weight NASDAQ 100 down 0.8. Dow down 0.4. Mid caps down 0.5%. Russell 2000 small caps down 0.65. Global diversified 60/40 stock bond down 1/3%. Our flagship GROTECTION portfolio down 0.8%. Let's get into the charts. We'll start off with the S&P 500. So after being up 10 out of 11 days, we're now in a 5-day consolidation. If you bring up a 30-minute chart, you can see pretty clearly how tight the action has been for the last five, actually the last 6 days before we started topping around this 56.40 to 56.50 level. On the downside, this 55.60 level continues to be support, and that's a key level to keep an eye on for tomorrow. We undercut or we bounced right at that level today and sitting right on the 8-day moving average. NASDAQ 100, the weakest of the indexes, as you can see, based on the relative strength line there. It did undercut but reclaim the 21, but it is sitting right near the lows of the day after hours as the NVIDIA conference call progresses. So close below the 50-day after bouncing around there for 2 weeks. We'll keep an eye on see if there's continued weakness tomorrow on there. Dow Jones Industrial Average continues to show relative strength for a week now, as this is a value slanted index right around the highs going back to early July. S&P 400 mid cap index bounced at the 8-day moving average today, right where you would want it to. And the Russell 2000 small caps, same thing, bouncing at the 8-day moving average. So those are the major indexes. One more, equal weight S&P 500 bounced at the 8-day moving average and is consolidating right near all-time highs, showing relative strength, as you can see here, for the past week plus versus the market cap weighted S&P. Onward to our inter-asset correlation charts. Here's the VIX bounce today, up 8%. No doubt had something to do with angst over NVIDIA's earnings. The dollar. We've been doing some reading about how this is an extremely crowded trade to the downside. So a bounce in the dollar will come to the detriment of precious metals, and also it typically acts as a headwind to stocks. So that's certainly something we're aware of and keeping an eye on. And also keeping an eye on the fact that we're coming into the normally seasonally weak period of September, just 2 trading days left in August before the Labor Day holiday. This is typically the slowest week of the year as everybody up north getting their last vacation plans in before they head back to school. So there's the dollar, precious metals now, GLD with the strong dollar down 0.7%. Chart still looks fine. GDX, gold stocks, bounced at the 21-day moving average down 2.2%. SLV, silver down 2.5%, sitting on the 50-day moving average. Bitcoin, yikes, gap down. It closed mid-range, so finding some support around that 33 level. I think that's below 60,000 equivalent, though, for the price of actual Bitcoin, down 5.3% on the day. On to bonds, tight action in bonds today. Not a lot to see here. BND, tight. The long bond TLT, tight. And the yields, not much movement there either, as we're looking forward, or the market is looking ahead to see what is going to happen with the interest rate decision. It's almost a layup that we're going to cut at least a 1/4 point in September. So that's our inter-asset correlation. Let's go to the tail of the tape. News, as I mentioned, NVIDIA lower by about 5% on earnings. Friday morning, we've got PCE inflation data. This might be last Friday's football game, so to speak, as Dan often says, as the fears of inflation seem to have tamed, and now we're looking more for economic strength. He's coming into today. S&P against this overhead resistance of 56.42. Came within 15 points of that. Now we need to be more concerned about support down around 55.60. And the other key, of course, after hours, the NVIDIA reaction, it's lower, volatile, but still within the expected move. We did hedge again, trimmed a little bit of our position flat of our most recent ad going into earnings. The fact that we're within the expected move means there's no blow up, and we also hedged for taxable accounts with some soon to be long-term gains. Day count, 5-day consolidation now, 13 days above the uptrending 8-day moving average, 11 days above the uptrending 21-day moving average. Expectations were positive. Since we're still above the 21, we're going to keep them positive, but more positive neutral. Very important to see what the impact of NVIDIA earnings is on the tech sector tomorrow. Let's see, ranges. How about sectors? Up strong today. Aerospace and defense, banks, financials, healthcare, bonds, neutral to the downside. Bitcoin, semiconductors, tech, oils, gold and silver stocks. The portfolios, we booked our gains on Upstart. It's trending nicely above the 8, broke it intraday. We locked it in. And MIDU, not making any progress on that. And we did undercut the 8-day early afternoon. Took a small loss on that. Also trimmed Uber, most recent ad, flat on that. Trimmed UPro going into earnings with our most recent buy being flat on that. That was around 55.92 on the S&P where we exited that, which is right near where we closed. And as I said, trim the most recent 1% NVIDIA buy as we were flat on that going into earnings. did hedge NVIDIA for taxable accounts. Net, a reduction from 1.43 to 1.23 in our adjusted beta. Keys for tomorrow, the earnings reaction to NVIDIA and the impact on the tech sector. Bottom line for the day, day three of tech weakness and value stocks relative strength. Definitely need to watch NVIDIA and the tech names tomorrow, as tech has been weak, and we've got a reason now for it to be weaker as NVIDIA down after hours. Trickles through to pretty much all of the AI related names. Let's take a quick trip through the portfolio. Not a whole lot to cheer about today here. There's NVIDIA. You can see down 6% now after hours. That's going to be slightly below the 50 and 21-day moving average. So that's a level we want to see it reclaim tomorrow to keep the chart healthy. Eli Lilly pulling back mildly today, continuing to show relative strength. Kava, anytime on a down day like this that a stock finishes positive, you got to be happy about it. And we really like the tightening up action of that. We want to see this reclaim the high volume close on 122 from the big volume gap up day. But for now, it seems like it survived the 6 million share offering without too much damage to the chart. Uber starting to show a little bit of relative weakness, or really not moving forward the way we want it to. Putting in a decent looking low volume handle. If we see some strength coming into here, we can certainly re-engage with that. Ferrari continues to show relative strength. ITB, third day pullback right to the 8-day exponential moving average. Upstart, we booked that today. That still looks great. No longer own it. Coherent, 5 days tight right into the 8-day moving average. So that's a trip through the portfolio. And with that, we're going to wrap it. As always, like to hear from you. The email is not Ted at revereasset.com. That's Don at revereasset.com. I am not Ted. I am Don. I forgot to update that part of the roundup. The phone's 855 Real Wealth. That's 855-732-5932. Excuse me. If you're interested in becoming a client, reach out to my partner, Dan, at revereasset.com. Our flagship portfolio, GROTECTION, has a dual mandate. That is to grow assets during uptrends, protect them during downtrends. We monitor, invest client assets across 3 time frames. Healthier the market, the better. We're always on the lookout for the strongest stocks and the strongest sectors in the right market. A plan stops in place at all times. If you're interested in this approach, reach out to us. And with that, I'll wrap it for Wednesday, August 28th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.